Hello, it is Ryan, the CEO and head quant here at happytrader.io. I hope everybody had a pleasant Thanksgiving and hopefully you did not let it bleed over through the entire weekend. But if you did, props to you because you are a braver soul than me. Today, we're going to get into some back testing using some cryptocurrencies just to kind of see how they did using our strategy for happytrader.io, which is our indicator, sentiment AI with a Luma trend. We are very simple. We're kind of like the in and out burger of trading. We have a very small menu. In our case, it is one item and it works very well for all different people. So, our mission is to help retail traders become better. And today we're going to go over a long only and short only test on Ethereum and Bitcoin. We're actually going to do a little bonus if you hang in there. So let's look at Ethereum. This year for crypto wasn't really the craziest year for crypto. It's one of them bear market years where, things kind of just settle down before they start rocket shipping back up. Folks start to become very bored with crypto, and the next thing you know, crypto is all over the place. So the first thing we're going to do is fire up our long only strategy, make sure our deep back tester's on. That's going to allow us to select time frames. We're going to go to today's date and we're going to set some parameters. So what we're going to do is use the Ethereum and US dollar. Let's actually see if we can go to the futures for Ethereum. Let's see if they're on here. They are on here. Okay, this is going to be way more interesting. So let's go ahead and start with $1,000 account. We're going to do one contract and we're not going to use pyramiding orders. No successive orders in the same direction is what that means. We're going to hit OK. We're going to make sure our deep back tester's on, and we have 11/27, 2 days date, which is Monday, to generate our back test. We're going to be using the long only strategy. We're going to be using the happytrader.io sentiment AI with the Luma trend. This is our product available on our website, and you can see a lot more videos if you just hit the like or subscribe button. We do a ton of back tests. I'm going to personally be teaching folks how to trade, and our entire mission of a company, and as a company we are startup in as of 2022, so we are brand new. Every like, every subscribe counts. But we're not here to be YouTube stars. We are here to help retail traders gain an edge in trading, and that has been a glaringly obvious hole in the financial ecosystem since I have entered many, many years ago, and that is what we're going to do. So we have our long only strategy up, we have our indicator up, and you can see that without the indicator, we just see kind of what happens after the fact. You can see that the entries do not make as much sense. Only after the fact do they make sense, and that's the point of the strategy. So we're going to go ahead and show the indicator. We have the long only strategy. We're going to turn it off, turn it back on, and then we are going to take a look at how we did. And wow, look at that. Woo-wee. Okay, folks, we have a back test here. And what we're going to do is just confirm that we are on the long only. And let me explain what that strategy is going to mean. So if we stretch our chart out a little bit, let's go ahead and really get it stretched out here. We're looking at the 5-minute interval. So what's happening with this strategy is we are buying as soon as we see our uptrend signal, and we are closing that buy AI as soon as we see a downtrend. So literally, we're just trading from the buys to the sells. That's all we're doing, right? So uptrend to the downtrend signal. Uptrend signal would be a buy AI, and you can see that if we remove the strategy and then put it back, it pops right back up. And then we have our close by AI order, which is going to be on all of these downtrends. So we're not running the long and the short. We're just running the long, and we're only running for this date range. So this is year to date 2023. So this is in a bear market for crypto. So I just wanted to be super clear on that. So with that being said, what we have here is the futures contract. And you're probably looking at this graph, and what we can do is just kind of pull this up a little bit so we can look at it. And you can see that what the backtest shows, and this is through TradingView, so this is going to be your number one charting platform on the internet. We're not affiliated with them in any way, but we love to develop products on TradingView, and our product is working fantastic on TradingView. So one of the big things that we like about it is that we are able to immediately backtest our strategies and indicators for feedback, and then we use that to condense into one product that is constantly evolving, and our subscribers love it. So you can see, starting out with $1,000 account, you had just this little blip of a drawdown. You went just down a little bit, and then just bang, you just went up, right? So Bitcoin is one of those tickers that's just really, really volatile. Um, so going into this back test, let's just go through a couple different things. We'll go through these rows and then we'll go into the list of trades, right? So this is pretty cool. So you see the equity curve, we had a small drawdown. So worst case scenario, let's say you needed $2,000 or $3,000 of margin. You only started with 1,000. You may have got margin called for a couple $100, right? Or you might have had to have just deposited or just had an email saying you had to deposit a couple $100 more into your account. And then it's just kind of off to the races from there. So you're just getting a lot of chop, a lot of chop. And what Ethereum likes to do is really just kind of chop around and really make you think it's going to drop. It does a lot of that. And you can see that we do have a max drawdown. But the first thing I want to look at here is the number of closed trades. So 553 total closed trades. So that's pretty interesting. There's people who do that in a month, like I say in a lot of other videos. If you watch my videos and subscribe, 553 trades looks like a lot, but for a whole year, it's really not that many. And that's on the 5 minute chart. So if you were to go out to like the 45-minute chart, it's going to be substantially less. And here's something, let's just focus in on the 5 minute chart for now. We'll do another longer swing trade video later. Um, we're going to see that our percent profitable is 28.21%. So you're probably thinking like, again, just like our other back tests, what's going on with this win rate? And it's typically the first thing that we get asked by folks is like, what's the win rate of the indicator? And the thing is, the win rate actually isn't what's important. It's how large those winners are when compared to your losers. So you could get a string of losers that are, very small, comparably compared to your winners, and you can see that here. And if we just kind of scroll down on the list of trades, you can see like a $6,200 winner. You might have a $550 drawdown, $100 drawdown, $425 drawdown, then a $1,500 winner, so on and so forth. And you can see that entire list of trades. You can see that demonstrated here as well. So despite the fact that you have your 28.21% profitable, as long as you are a good loser and you're able to handle those losing streaks, you're going to get rewarded with those bigger wins that are going to make up for the losers. Then all of a sudden you get these huge winners, and then you're just kind of up, right? So that's just kind of how it works, like these $1,700 whoppers compared to the $100 or $500 loser that, you get the idea, right? So over the course of 553 trades for the year, the 5 minute chart yielded a really impressive profit. So, with that being said, you're seeing a 95% drawdown, and that can be attributed to this big carve out right here where we hit this huge upswing right here, and then bang, we cratered down. So we went down 95%, and that was from our high, but because that was early in our trading journey, not too bad of a drawdown. And then if you compare it to 7,277% on the $1,000 invested, the 95% drawdown combined with the fact that it is a volatile instrument like Ethereum is going to kind of tell the tale. And that's really kind of what we're doing here. So that's very impressive. Let's switch over to Bitcoin, and we're going to do the Bitcoin futures. Sorry, so we're going to do BCT futures, and we are going to generate the report. And we can see similar 6,000 715% with a similar drawdown. You can see that big chop down. So we had a huge upward drift in the beginning of the year, and then we had the kind of these cuts, right? This is how cryptocurrency trades. Everything's almost a crash until it's not. And then you see the equity curve goes up. Now, that's super interesting as well. If we go into our strategy tester, let's go back in and we go to list of trades, you can see a similar theme as Ethereum. So you can see, like a big whopper, $3,000 winner, $1,000 loser. And again, this is Bitcoin futures. You could be trading this same strategy just with pieces of Bitcoin. So what's cool about this is, like, if you're a Bitcoin trader, you could literally just have your subscription set up for happytrader.io, pull up the Bitcoin futures for the CME, that's the Chicago Mercantile Exchange that does all of the futures contracts for commodities. And you could just literally set up your alerts by overlaying, adding the alerts and sentiment AI buy and sell. And then you get your buy and sell for your trends. And you're going to want to put in the trades per this back test on the uptrend and the downtrend signals, and that's going to be all you have to do. That'll buzz on your phone, or it'll buzz on your, anywhere, and it will it will come up on your computer, your phone, your email, webhooks, whatever you're using to integrate, and then you're going to be able to place your trade. And the cool thing is that if you want, you can use paper trading, and you can do that directly on the chart through your TradingView account. So that's very, very cool. So you get the proof of concept before you risk any money. You get to paper trade for as long as you feel comfortable. We have our back tested strategy showing how well we've done in a bear market where we don't even have a lot of volatility. And you're seeing the Illuma trend. So you can kind of tell when you have, let's say, a sell signal, which is that's not the trading signal. This would be, let's say you're going short, you're going to have at least potentially a scalp on your hands. Now, something we've noticed, and I say this in other videos, is amplitude. When you get your sell signal here and you start to get some red Illuma trend indicating a downtrend, and then you get your downtrend signal that's semi close to this, like the closer it is to this, it can show velocity. It doesn't always show velocity, but you can see that it did here on this trend, and it does on many other ones. You can also see something very interesting is that currently on our today's chart, we have a buy signal with a relatively strong uptrend showing for today. So we might end up getting a ripper all the way up into this direction. And you can see on both the Ethereum and the Bitcoin charts that we are kind of poised. We don't have the uptrend signal yet on Ethereum, but we do have it on Bitcoin. So that's kind of the way that's looking. Is if we do get that confirmation of bullishness this week, we may get a non-divergent signal, so a fully compliant signal between those two indexes, Ethereum and Bitcoin. And you really can look at them as indexes, sort of like the crypto equivalents of, let's say, maybe the Dow would be like Bitcoin, and then the maybe the S&P 500 would be Ethereum, and then maybe Dogecoin or Shiba would be the Nasdaq. I'm not really sure, but um, generally I like to stick to the indexes if I'm going to be looking at crypto. One other thing to be mindful of is crypto is a kind of an invest at your own risk type of deal. It's not super regulated. Now we do have the futures, so we have the CME. If we go to the ETH futures, we do have them, and they are by the CME, and they are fully legit. And we have the CME is for that's the Chicago Mercantile Exchange. Like I had mentioned, that is going to be for your commodities trading. For things like options chains, stuff like that, you're going to be looking more at the CBOE. So that's going to be your options, and then you have your NYSE or New York Stock Exchange, NASDAQ. And then, of course, you have your big number, your overarching Dow Jones Industrial Average. And that's going to pretty much do it for today's video. That was a pretty comprehensive Ethereum and Bitcoin kind of back test and showing you how these strategies can work. especially this long only strategy, which is just, absolutely beautiful. If we just switch it to the one contract and generate the report fresh, you can just see that it's nice. Excuse me. You are going to have a big drawdown, but 7,277%. A lot of people don't make that compounding over 10 years, right? So you kind of have to take the good with the bad, and it depends on your personal risk tolerance. There's also ways, like I said, to trade in Ethereum and Bitcoin without going nuts. You don't have to trade a full size contract. You can trade smaller contracts. You can trade correlated assets. You can trade the raw asset, which is non-leveraged. So the futures is going to be a derivative. The other derivatives are known as options. Pretty sure if you're watching this channel, you're familiar with what those are. And those are going to offer leverage. And with leverage comes your bigger gains, but you get those big drawdowns as well. But if I'm investing $1,000 and only making 553 trades in a year, and for a 7,200% return and a 95% drawdown, I'm taking that bet. And this might be a situation where you start out with $1,000 and you get up to $16,000, and you might say, "Hey, I've just 10x'd. I'm going to take some money off the table," and you might start with another $1,000, right? So that way you're kind of playing with house money the entire time. These are just ideas of how to implement. There's also the kicker that we are not dealing with any pyramiding, any scaling in, which is a video that will be done. This is just simply with one contract. This is the smallest size, and you can see how well these Ethereum futures backtest, and also the Bitcoin ones just slightly worse at that 6,000%, but with slightly more trades, and that's just because ETH is just I guess ETH is more like the Nasdaq, and then Bitcoin's more like the S&P. If you had to use those two indexes as the correlations, and then just looking at the market today, just to do an overview, we kind of have a choppy market. One of them sideways days, probably good for iron condors. But again, let's flip back to we will remove the strategy and just look at the indicator in its pure form. You can set alerts for all of these signals. When the trend reverses, you can set an alert. And then when you get your actual trading signals, you can set your alert. And you will get these uptrend and downtrend signals that you can either wait for a retracement on if you are a scalper, or you can just take the signal. I would recommend paper trading to get your style down first, and then putting maybe just some time into back testing different instruments, and forward testing different instruments is a great way to put it. And you can also use the trading panel directly through TradingView, or you can link to your own brokerage, but we do not affiliate with TradingView directly, other than when you become a member, we will point you to their website. And I think there's some kind of offer we're running there, but we're not sponsored by them in any way. So you can get started at happytrader.io. This was today's back test. It was a real eye opener, even for me, and all the work that we've put into this indicator. This back test is very impressive. I didn't know what to expect from a 5-minute bar back test of Ethereum, but it looks really solid. I'm not crazy about the drawdown, but the fact that those winners are just so outsized compared to those losers shows that it has a positive expectancy. So just go ahead, hit that like and subscribe button for some longer back tests that we'll be working on later this week. Again, this is Ryan from Happy Trader. Have a great day and happy trading.